Florida property taxes. Now, have you been searching homes online and you scan the listings, you scan the home's property taxes, and then you see another home, possibly even in the same neighborhood, and the taxes seem to be so much higher or lower? Wondering how this is happening and how you can estimate the taxes on your new home purchase? Well, today I am diving into all the nuts and bolts of property taxes in Florida. I will discuss why they seem to be such a variety of prices, how to estimate your taxes, and what to be aware of when searching for homes in our area. And for my Florida residents, stick around until the end because we are going to talk about homestead portability and how this can save you thousands in taxes. I'm Lisa McBride with Sarasota Neighborhood Experts in Sarasota and Lakewood Ranch. Now, if you find this information helpful, I'd love it if you would subscribe, hit the bell button so you're notified when I post new videos, and leave comments below. I love hearing from you. Okay, so when I'm out showing homes to my clients and we have that MLS sheet in front of us, people always ask me, what are the taxes? And I always tell them exactly what is on the MLS sheet. And then I always add, please keep in mind that this amount is subject to change and most likely will change. Florida law provides that the property must be reassessed at full market value in the year following the sale. So that means if you purchase a home in 2022, it will be reassessed January of 2023. In Florida, real estate taxes are paid in arrears. This means that you pay your real estate taxes at the end of the year for the prior year. In a real estate transaction that closes prior to the time when real estate taxes are paid for the year, the seller gives the buyer a credit for taxes for the period of time when seller owned the property. Now, back to why there is so much discrepancy between taxable values on properties. Well, in Florida, we are a homestead state. Now, if you'd like more information on homestead, I do have a video specifically about that. Homestead exemptions are available on your primary residence, which entitles you to a discount on taxable value of your home at approximately $50,000. Even more importantly though, our Save Our Homes Act, because this caps the amount of taxable value can be increased each year by no more than 3%. Now, this is significant when reviewing homes for sale. So here's an example. For instance, if you're looking for homes here in Sarasota, one of our very popular neighborhoods is Gulfgate. Now, this neighborhood was developed in the late 70s and early 80s. And for this example, let's say the current homeowner purchased the home in 1996 for $200,000. If they purchased this home at $200,000 and homesteaded the property and the taxable value or assessment was dropped by $50,000 for the homestead, so then it's appraised at $150,000 in 1996. And each year it cannot be increased by more than 3%. While doing some research, I have found that generally the county was typically raising this assessed value by 1 to 2%. So not very much. And also, during the Great Recession, when prices dropped and everything was really an upheaval, they actually went down in values. So the appraiser had to actually decrease the values. So the appraised value was lowered. So you can see how the taxable amount really changed. So now, 26 years later, that tax bill can be so low. And you see that the neighbor's home last year sold for $550,000 and is taxed at that just value. You can see why there's so much disparity between these two properties and the taxes. So I mentioned that clients often ask, what are the taxes? Well, I always like to look at the current taxes and then if the home has been homesteaded, and next, how long the current owner has owned the home. Years of ownership is only to give us an estimate or an idea of the assessed values increases. Now, if a home has only been owned for 3 years, you're gonna have a much more realistic taxable value than one that was owned for 20 years. However, in the past 2 years, we do know values have increased significantly. Now, in the state of Florida, most counties do have websites you can visit to get an estimated tax. And I put the emphasis on the word estimated. Now, I normally tell buyers to estimate high, and generally speaking, here in the Sarasota and Manatee counties, I tell most buyers to estimate 1.2% of your market value. But please keep in mind, I am not talking in absolutes. This is an estimate. Now, the property tax estimator page is a great resource to use. I know that when it comes to taxes, it can be, as my mom would like to say, about as clear as mud. What are your thoughts on our Florida property taxes? Are they higher or lower than you're used to paying? I'd love to hear your comments below. And if you've lived here in Florida for a long time, what are you paying in taxes? I think a lot of the followers would love to hear what you're normally paying here in Florida for taxes. So are you planning on purchasing a second or possibly a third home here in Florida and concerned about assessed values skyrocketing because you're not homesteaded and you don't have that 3% rule? Well, in the state of Florida, property values for homes that are not homesteaded can only increase no more than 10% year over year. Now, I know that sounds like a lot, but in the last 2 years with homes appreciating 20 to 25%, this is still a big savings. So it is quite helpful. Now, in doing my research again, there are a few things that I found that I thought were of great insight. Homes reappraised January 1st. Again, I want to state that this next statement is not an absolute, but it is something I discovered. Typically, when they're reappraised January 1st, the appraised value comes in somewhere between 85 and 90% of the sold price. So if you purchased a $600,000 home and it's appraised at 90%, that's $540,000. And if you've homesteaded this, reducing it by another $50,000, your taxable value of that home is $490,000. And if you estimate 1.2% of the value, you will have a tax liability of approximately $5,880. Now, if you look at the county estimator, you will notice my numbers are higher than theirs. This is due to the fact that they may not be including the non-ad valorem taxes. If I've not already confused you, I may now, because I think taxes are a little confusing for everyone. Your tax bill is divided up by ad valorem and non-ad valorem. Ad valorem taxes are levied on real property and calculated using the property value and approved millage rate. Now, millage rate is 1/10 of 1%, which basically equals to $1 of taxes for every $1,000 in home value. A number of different governmental authorities, including counties, municipalities, school boards, and special districts, they can all levy these ad valorem taxes. Now, a non-ad valorem assessment is a charge or a fee, not necessarily a tax, which helps cover costs associated with providing specific services or benefits to a property. For example, waste collection and disposal, sewer, lighting, fire protection, ambulance services. These are all non-ad valorem. Also in the state of Florida, there are additional personal exemptions, such as if you're widowed, sight impaired, might be military or disability. These are all exemptions, but be sure to research Florida Department of Revenue for a complete list that may apply to you. Now, one final note on the actual tax liability you need to be aware of and familiar with is CDD. If you're buying a home with a CDD, remember this stands for Community Development District, and we see this very often in the Lakewood Ranch area. Almost all homes in this area have CDD fees. However, most CDDs are a bond and they're paid off in 20 or 30 years. So some have been paid off, but they're in place to help with finance construction, operating, maintenance, infrastructure improvements, and things like that. These CDD fees will be included in your tax bill. As I said, Lakewood Ranch generally has them, but also New Welland Park area in Venice will have them. Sky Ranch in Sarasota will be having CDD fees. A lot of Sarasota, as mentioned, doesn't have CDD fees, so you really need to check into that when you're purchasing a home and make sure you ask that question, or your realtor should be telling you that as well. So how does all this affect today's real estate? Well, it's important to keep in mind the large variations between homes' taxable liabilities and when you're searching. So don't rely on the amount that is rightfully disclosed on the MLS sheet. This number will most likely change. On a final note for all my Florida homeowners, now if you're a Florida homeowner who may have owned for some time, but you're ready for your next move and concerned that all of a sudden your tax bill will skyrocket, well, in Florida, they allow for portability, which is specifically for homeowners that are moving from one primary residence to another. Portability is a bit more complicated, and there's a variety of scenarios that are considered. But this allows basically Florida homestead owners to transfer their Save Their Homes assessment limitations from their old homestead to a new homestead, lowering the assessed value for the new homestead. I know this is as clear as mud. There's a lot that goes into portability, but believe me, it really saves thousands of dollars for you. Now, for more information on portability, again, check out your local county government site. Now, I covered a lot in this video, and I will have links in the description below to help further explain, and also a link to the tax estimator for your home. If you still have questions on property taxes, just give me a call. Be sure to subscribe, like, and let me know how I can help. Leave comments below. And also, all my contact information is below. As always, I really do appreciate you watching, and until next time, take care.